Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras. In April 2017, Part B, the subject code is BYA4A. The question number is 16. This question chapter is amalgamation, absorption and external reconstruction. Let me read the question. A Limited and B Limited have agreed to amalgamate. A new company is C Limited has been formed to take over the combined concern as on 31st December 2013. After negotiation, the assets of the two companies have been agreed as shown in the following balance sheet. Balance sheet of A Limited and B Limited. In liability side, share capital in rupees 10 each, 5 lakhs to A Limited and 10 lakhs to B Limited. Reserve fund 50,000 to A Limited, no value for B Limited. Profit and loss account 50,000 to A Limited and 50,000 to B Limited. Creditors 50,000 to A Limited, 80,000 to B Limited. The total liabilities are 6,50,000 to A Limited, 11,30,000 to B Limited. So in the asset side, under the assets, land and building 3 lakhs to A Limited, 5 lakhs to B Limited, and plant and machinery 2,50,000 to A Limited, 2 lakhs to B Limited, and goodwill 50,000 to A Limited and no value for B Limited. Patents no value for A Limited, 1,10,000 to B Limited, and the stock 20,000 to A Limited, 1,50,000 to B Limited. Sundry debtors 20,000 to A Limited, 1,20,000 to B Limited, and bank 10,000 to A Limited and 50,000 to B Limited. So the total assets are 6,50,000 to A Limited, 11,30,000 to B Limited. The assets and liabilities will be taken over by C Limited. It issued 50,000 shares of rupees 10 each to the public for raising working capital. Assuming purchase price is to be settled in fully paid shares of rupees 10 each, compute the purchase consideration payable, give journal entries and balance sheet of C Limited. Before going to calculate the purchase consideration and a balance sheet of a purchasing company, we should know these notes information. The first one is A Limited and B Limited are selling company or transferor company. C Limited is a purchasing company. The method of this sum is amalgamation in the nature of merger. So amalgamation in the nature of merger equal to shareholders holding is more than 90% on the face value of the equity shares of the selling company. And net payment method equal to share capital plus debentures plus if there is any fractional payment in cash. Then we are going to prepare the purchase consideration under the net assets method in bracket amalgamation in the nature of merger. In particular column, share capital in rupees 10 each. The amount is rupees 5 lakh to A Limited and 10 lakh to B Limited. So these are the amounts are considered as the purchase consideration for each category of the company of A and B. That's all. Then we are going to prepare the journal entries of purchasing company. Purchasing company is C Limited. The first journal entry is business purchases account data. 2 liquidators of A company account creditor and 2 liquidators of B Limited company account is creditor. So the actual amount of purchase business is 15 lakhs, which we have to mention in the debit side, and for liquidators of A we have to mention 5 lakhs to credit side, and for B Limited we have to mention 10 lakh in the credit side. So it means we are going to pay the purchase consideration amount to selling companies. So in bracket being purchase consideration payable as per the agreement. with the selling company by the purchasing company. And journal entry 2, land and building account data for both company A and B. The total amount is 7 lakh, which we have to mention in the debit side. And plant and machinery account data for both companies, the total amount is 4,50,000, which we have to mention in the debit side. And goodwill account data for A Limited, the amount is rupees 50,000, we have to mention in the debit side. And patents account data for B Limited, the amount is rupees 1,10,000, we have to mention in the debit side. And the stock value for both company, the total amount is 1,70,000, which we have to mention in the debit side. And sundry debtors account data for both companies, the total amount is 1,40,000, we have to mention in the debit side also. And bank account data for both companies, the total amount is 60,000, which we have to mention in the debit side. And in the credit side, to profit and loss account for both company, the total amount is 1 lakh. And to reserve fund account creditor, the amount is rupees 50,000 for A Limited, which we have to mention in the credit side. And two creditors for both company of A Limited and B Limited, the total amount is 1,30,000, which we have to mention in the credit side. And two business purchases, the amount is rupees 15 lakhs, which we have already found. The business purchases is also known as purchase consideration. It means the purchasing company has taken over the assets and liabilities of selling companies. So that is why we need to mention these assets information in the debit side and credit information in the credit side. So there is no any difference value. So the account has been tallied. And the third journal entry, liquidators of A Limited account data 5 lakhs, liquidator of B Limited account data 10 lakhs. In credit side, two share capital account in bracket A Limited 5 lakhs, which we have to mention in the credit side, and share capital account B Limited 10 lakh, which we have to mention in the credit side. It means the C company or purchasing company has paid purchase consideration value to the selling company of A and B in the form of shares at rupees 10 each. So in bracket, being the purchase price paid in the form of shares of rupees 10 each at par for both selling companies. Then we are going to prepare the notes to accounts for preparing balance sheet of purchasing company. So the note number 1 is share capital. Under the share capital, we have to mention issued and paid up share capital. A Limited selling company, the share capital amount is 5 lakhs plus B Limited selling company share capital amount is 10 lakhs. So the total amount is 15 lakhs. And note number 2 is reserve and surplus. Under the reserve and surplus, we have to mention reserve fund for A Limited 50,000 plus profit and loss account value for both A and B Limited is 10 lakhs. So the total amount is 1,50,000. That is note number 2 total. And note number 3 is a trade payable. Under the trade payable, we have to mention creditors for A Limited, the amount is rupees 50,000, and creditors for B Limited, the amount is rupees 80,000. The total amount is 1,30,000. That is note number 3 total. And note number 4 is tangible assets. Under the tangible assets, we have to mention land and building for A Limited, the amount is rupees 3 lakhs, and plant and machinery for A Limited, the amount is rupees 2,50,000. The total amount are 5,50,000, which we have to mention in the outer column, plus land and building for B Limited is 5 lakhs, and plant and machinery amount for B Limited is 2 lakhs. So the total amount is 7 lakhs, which we have to mention in the outer column. So the total tangible assets are 12,50,000. It means 5,50,000 plus 7 lakhs. Then note number 5 is intangible assets. Under the intangible assets we have to mention goodwill. For A Limited the amount is rupees 50,000 and patents for B Limited the amount is rupees 1,10,000. So the total amounts are 1,60,000. That is note number 5 total. And note number 6 is stock. Under the stock, the stock value for A Limited is 20,000 and the stock value for B Limited is 1,50,000. So the total is 1,70,000. That is note number 6 total. And note number 7 is a trade receivable. Under the trade receivable we have to mention sundry debtors for A Limited is 20,000 and sundry debtors for B Limited is 1,20,000. So the total amount is 1,40,000. That is note number 7 total. And note number 8 is cash and equivalent items. The bank amount for A Limited is 10,000 and the bank value for B Limited is 50,000. The total amount is 60,000. That is note number 8 total. Then we are going to prepare the balance sheet of C Limited as on 31st/12/2013. So in particular column we have to mention as equity and liabilities. So under the equity and liabilities we have to mention shareholders funds. So under the shareholders funds we have to mention share capital, that is note number 1 headings, and the note number 1 total is 15 lakhs which we have to mention in the rupees column, and we have to mention reserve and surplus, that is note number 2 heading. The note number 2 total is 1,50,000 which we have to mention in the rupees column, and we have to mention the current liabilities. Under the current liabilities we have to mention trade payable, that is note number 3's heading. Note number 3 total is 1,30,000 which we have to mention in the rupees column, and the total value is 17,50,000. It means 15 lakhs plus 1,50,000 plus 1,30,000. So the total amount are 17,50,000. That is equities and liabilities total. Then we are going to prepare the assets. Under the assets we have to mention non-current assets. Under the non-current assets we have to mention tangible assets, that is note number 4th heading. The note number 4 total is 12,50,000, and we have to mention the intangible assets, that is note number 5th heading, and note number 5th total is 1,60,000. Then we have to mention the current liabilities, not current liabilities, current assets. So under the current assets we have to mention stock, that is note number 6th heading. The note number 6th total is 1,70,000 which we have to mention in the rupees column, and we have to mention trade receivable, that is note number 7th heading. Note number 7 total is 1,40,000 which we have to mention in the rupees column, and cash and equivalent items, that is note number 8th heading, and note number 8 total is 60,000, and the total assets are 17,80,000. It means 12,50,000 plus 1,60,000 plus 1,70,000 plus 1,40,000 plus 60,000. That's all.